Have you ever looked at a company's financial report and thought, okay, what's really going on here behind these numbers?
Right. It's often more than just profit or loss, isn't it? There's strategy, market stuff.
Exactly. And sometimes surprising things hidden away. Today, we're doing a deep dive into exactly that for Seshasayee Paper Boards Ltd, SPB.
Focusing on their Q1 for fiscal year 26. That's the quarter ending June 30th, 2025.
Our mission really is to get past the headlines. We want to pull out the key insights from their actual filings, their communications.
Yeah, so you, the listener, understand not just what happened, but maybe more importantly, why it matters for SBB and, the whole paper industry.
Absolutely. We're digging into the unaudited financial standalone and consolidated the auditor reviews and the operational highlights they shared, all dropped on July 19th, 2025.
So let's get into it. Peel back those layers.
Okay, let's start right at the top. The immediate financial picture. Q1 FY26. How did things look compared to, say, last year or last quarter? Revenue first.
Okay, revenue from operations, or RFO. Standalone for Q1 was just over 385 crores rupees.
385 crores. How does that stack up?
Well, it's definitely down, noticeably down from the previous quarter, Q4 FY25, which was over 500 crores.
Wow, quite a drop sequentially.
And it's also lower than Q1 last year, which was around 422 crores. So yeah, a clear dip in revenue.
Right. And moving down the line, profitability. What about profit before tax, PBT, and net profit after tax, PET?
PBT standalone was about 23 crores rupees for the quarter.
23 crores. And compared to last year?
Significantly down. Q1 last year was nearly 51.5 crores, so less than half.
Oof. And net profit after tax, following the same pattern.
Pretty much, yeah. PAT also dropped substantially. Came in around 17 crores this quarter, compared to over 38 crores in Q1 FY25.
Okay. And that obviously impacts earnings per share, EPS.
It does. Basic standalone EPS for Q1 was 2 rupees 83 paisa.
Which is down from?
Down from 6 rupees 37 paisa in Q1 last year.
Got it. And one more metric, people often look at EBITDA.
Yep. Profit before interest, depreciation, and tax. That was roughly 35.6 crores.
Also down from Q1 last year?
Yes, that was around 64 crores. So you look at these core numbers, revenue, PBT, PAT, EPS, EBITDA. They all paint a pretty clear picture, right? And a noticeable year-on-year dip.
Definitely looks that way on the surface.
But, and this is where it gets interesting, you have to look a bit deeper. Because despite all those operational profit metrics being down, the total comprehensive income for the period actually jumped up quite a bit. Standalone, it was 64.5 crores rupees in Q1.
Wait, 64 crores? Up from what?
Up massively from the previous quarter, Q4 FY25, though still lower than Q1 FY25's figure.
How does that work? Profits down, but total comprehensive income up.
It's mainly almost entirely due to a big net fair value gain on their investments in equity instruments through something called other comprehensive income, or OCI.
OCI.
Yeah, so it's a gain of over 55 crores rupees.
So OCI, just quickly, what is that exactly? Why is it separate?
Think of it like this. It's gains or losses that aren't from their main job, making and selling paper. It's from things like the value of stocks they hold changing.
Ah, so investment gains, not operational gains.
Exactly. It boosts the overall bottom line number, the total comprehensive income. But it's crucial for you, the listener, to realize this isn't profit from selling more paper or being more efficient in the factory.
That's a really important distinction. It shows how non-operational stuff can, well, skew the headlines.
Precisely. You have to dig into the core business health.
Okay, so let's do that. You mentioned earlier production volume was actually slightly up.
Yeah.
How does that fit with lower profits? It feels counterintuitive.
It does, doesn't it?
Yeah.
So total production in the quarter, April to June 2025, was 61,543 tons.
Okay.
And that was, yes, marginally higher, about 1.3% up compared to the same time last year.
Interesting. Any specifics on where that production strength came from?
Well, they highlighted their erode unit. Apparently, it's running really well, operating at over 100% of its rated capacity, like 104% utilization for total production.
Wow, that's impressive efficiency. Really cranking it out.
It points to strong operational control, yeah.
So if they're making slightly more paper, how did that translate into actual sales, given the tough market you alluded to?
Right, so sales volume. It's a mixed bag. Domestic sales volume actually looked pretty decent. It increased by 5% year on year.
5% growth domestically, that's positive.
It suggests internal demand in India is holding up reasonably well for them. But, and this is a big but, export sales volume fell off a cliff, dropped dramatically by 35% compared to last year.
35%, that's huge.
Yeah, down from over 6,000 tons to just about 3,900 tons. That export drop is a really key piece of this puzzle.
Okay, so let's connect the dots. Higher production, decent domestic sales, but exports cratered, and overall profits are down. What were the specific, pain points hitting the bottom line?
They pointed to three main things. First, lower average realizations per ton.
Meaning they just got less money for each ton of paper they sold.
Exactly. Selling price was lower. Second, as we just said, that massive 35% drop in export sales volume, fewer tons sold internationally.
Right.
And third, the cost of wood, a key raw material, obviously. That cost went up significantly.
Lower prices, lower export volume, higher wood costs. Ouch, that's a tough combination.
Definitely challenging factors.
You'd think the profit dip could have been even worse then. Did they manage to counter these pressures anywhere? Any mitigating factors?
Yeah, they did manage to offset some of it, partly through just selling more tons overall, thanks to that domestic growth.
Okay.
And they also benefited from lower prices for other inputs, like chemicals and coal. That helped.
So some input costs went down, even if wood went up.
Right. And they also mentioned an overall reduction in the cost of production just due to, better operations. That efficiency we talked about at a road.
So internal efficiency helped soften the blow from the tough market conditions.
Helped, yes, but couldn't completely negate those external pressures.
Which brings us to the bigger picture. How do SBB's struggles fit into the wider market? What's happening in the paper industry in India and maybe globally?
Well, the context is pretty challenging. The Indian paper market itself remains weak. There's this persistent issue of cheaper imported paper being readily available.
So import competition is still fierce.
Very much so. And you also have other paper mills apparently liquidating their stock, offering deep discounts. That creates market-wide pricing pressure. Everyone feels it.
A race to the bottom on price almost.
It can feel like that. Plus, you've got global factors. Tariffs announced by the U.S. have disrupted supply chains. And generally, weak global demand means more supply gets pushed into markets like India.
So a demand-supply mismatch, basically. Too much paper chasing, too few buyers, globally and domestically.
That's a good way to put it. It creates an unfavorable environment.
And is the international market any better? You mentioned the export drop.
No, not really showing signs of recovery yet. They specifically mentioned prices dropping from places like Indonesia and China, which, again, just adds to the global pressure and potentially more imports into India.
Okay, it sounds pretty grim out there.
Okay.
So given all that, what's the company's own outlook? What are they telling shareholders about the rest of this fiscal year, FY26?
Their outlook is pretty cautious. It basically said demand and pricing will really depend on big global economic trends.
Makes sense.
And also on getting trade agreements sorted out, especially resolving that U.S. tariff situation.
So lots of external dependencies.
Very much so. Their baseline expectation seems to be that the market, both India and globally, will likely stay weak through the rest of FY26.
That's not exactly optimistic. Is there anything they're looking at as a potential positive? Any silver linings?
Yes, there is one potential bright spot they mentioned. Wood prices.
The input cost that went up.
Exactly. They said wood prices have started showing signs of softening, coming down a bit.
Okay, that could definitely help margins.
It should, yes. If that trend continues, it provides some relief on the cost side in the upcoming quarters.
All right, so despite the tough current climate, what are they doing strategically? Looking longer term, any big moves for future growth or stability?
They're definitely making moves. One big one is something called the Mill Development Plan 4, or MDPIV, Phase 1 at their Erode unit.
Okay, MDPIV, what does that involve?
It's focused on increasing their pulp and paper-making capacity, boosting production potential, and it's a significant investment till they bear. The project cost is pegged at 405 crores rupees.
405 crores, that's substantial, a big bet on the future.
It is. But there's a condition, a pretty important one.
Which is?
The whole plan hinges on getting approval from the Ministry of Environment, Forest, and Climate Change, the MOAF&CC. They need the green light for a 20% capacity increase at Erode.
And do they have that approval yet?
No, they mentioned that environment clearance is currently awaited, so that's a key regulatory hurdle they still need to clear.
Got it. So that's organic expansion. What about acquisitions? Didn't they buy some assets recently?
Correct. They acquired assets from Seshasayee Paper Ltd, which was in liquidation.
Seshasayee Paper, right?
Yeah, the NCLT, the National Company Law Tribunal in Chennai, approved the sale through an e-auction back in May 2023. SPB bought it as a going concern.
Meaning they intend to run it, not just sell off the parts.
Exactly. The sale certificate is issued, assets are handed over, and SPB is now working on reviving it, refurbishing things, getting operations going again.
Sounds like progress there. Is that all straightforward now?
Well, not entirely. There's a bit of a legal wrinkle still.
Oh.
A few appeals challenging that original NCLT sale order were filed in the NCLT, that's the appellate tribunal.
Okay, so the sale is being challenged legally.
Yes. The appeals were heard earlier this year, February-March 2025, and the NCLT reserved its orders back on March 4th. So the final word from the appellate body is still pending.
So there's still some legal uncertainty hanging over that acquisition, even though they have the assets?
Correct. It adds a layer of risk or complexity until those appeals are fully resolved.
Okay, so we've covered operations, market, strategy. What about the oversight? Corporate governance. Did these results trigger any changes there?
Well, the process seems standard. The results were reviewed by the audit committee on July 18th, then approved by the main board of directors the next day, July 19th.
Standard procedure.
But interestingly, on that same day, July 19th, the board also reconstituted the audit committee.
Shakeup in the audit committee. New members.
New chairman, S. Dasgupta, and a list of members, including Sri Mohan Verghese Chonkath, Sri Sharad Bast, Sri TCA Ranganathan, Dr. C. Chandramouli, and Sri Kunal Jalan.
So some changes in who's overseeing the financials at the committee level.
Reflects ongoing attention to governance, yes.
Okay, so let's try and wrap this up. We've seen SPB navigating, well, really challenging market conditions in Q1 FY26. Lower prices, that big export drop, higher wood costs hitting profits.
Definitely facing headwinds.
But we also saw strong operational efficiency, like at the Erode plant, higher production, good domestic sales growth.
Yeah, some internal strengths showing through.
And they're clearly thinking ahead with that big MDPIV expansion plan, even with the environmental clearance pending and the Servalakshmi acquisition, despite the ongoing legal appeals.
Ambitious strategic plays, for sure.
So thinking about all these different pieces, the tough market, the pending approvals, but also softening wood prices.
Yeah.
How do you see these things potentially coming together? Could the story change for SPB in the next few quarters?
It's a really interesting question. If those wood prices keep falling, that helps margins. If they get the green light for MDPIV, that signals future growth. If the Servalakshmi integration goes smoothly despite the appeals, that adds capacity.
And if those global trade issues get resolved?
Exactly. That could ease the export pressure. So there are definitely potential catalysts, but also significant risks and uncertainty still.
So for you listening, considering everything we've unpacked, the market weakness, the legal bits, the potential cost savings, the big strategic bets, what really stands out, how might these factors shift the narrative for Seshasayee Paper and Boards Ltd going forward? Something to think about.